Hello and welcome. Richard Morris here from Morris Succession Lawyers, coming from the beautiful Lighthouse Beach in Port Macquarie. Here this morning, I just thought I'd have a word about life insurance. It's something that I deal with a lot of people in their 40s and 50s, where life insurance is obviously relevant when we're doing estate planning reviews, but it's not generally something that comes up or not generally something I see, because a lot of my clients aren't in their 20s. But I did have a rather tragic case recently where a bloke who was only aged 23 passed away. Now, he had a property that was owned as tenants in common with some other family members, and it became a reminder for me that people really need to make sure that they've got appropriate life insurance coverage. Now, I'm sure my friends in the financial planning space are probably yelling at their screens right now and saying, of course, life insurance is important for people of all ages. But when I entered the workforce many years ago, life insurance was simply tacked on to my super, and it wasn't something that I had to have a conversation about or necessarily gave any thought to, and it was just tacked on, and it was always there. And it wasn't something that when I purchased my first property that I needed to give a great deal of thought to in terms of would it be enough to cover my mortgage. But as I understand it, in the last few years, the federal government's changed the rules there, so that it now seems that if you're under 25, you've still got to opt in for life insurance, which for those people who are purchasing property, have children and they're under the age of 25, or they've got low super balances, you've really got to look at this, because it can cause catastrophic consequences for your family if you are to pass away unexpectedly. Now, of course, no one's expected to pass away in their 20s. You'd rarely find someone in their 20s who gives much thought to death, but particularly in regional areas, probably not so much given the cost of living in the cities, but in regional areas, people do purchase property in their 20s, and it's vital that you have a look at your life insurance arrangements at the time you purchase property, just to make sure that if something unexpected does happen, maybe from an estate planning perspective, it's okay for the property to be sold. And certainly in the estate administration, I don't generally find banks particularly in a hurry to have their mortgage paid, as long as there's steps being taken in respect of the estate administration. But if you have people who will need to remain in the home, or you have young children, then definitely needs to be something that you put forward as part of your review of any estate plan. Alright, if you need any advice, feel free to contact myself or the team at Morris Succession.